Okay, folks, welcome to Sunday Night Futures Live. My apologies for the tardiness, but we have a little bit of there's the video of me. Okay, we had a little bit of a technical issue. My crack production team of me fixed it. Okay, so we have a lot to go over. This is going to be a big one. So let's begin with first, like, subscribe. You know the deal. Leave a comment if you're watching this on the replay. If you don't disagree, agree, whatever, doesn't matter. Engage. So let's talk first. And I spent a lot of time on the week ahead commentary this weekend talking to members about strategy moving forward. Now, you're seeing that the futures are opening up about, this is the E-minis, up about a quarter percentage point. That's not a bottom. That's not a bottom. Bottoms do not work like this. What you want to wake up, you want to see bright red futures, and then you want to see a bearish key reversal bar on the day. Excuse me, bullish key reversal bar on the day. Meaning, you move lower, especially you want a gap lower, and then a reversal bar. Now, what they'll probably do tomorrow, if they maintain the bright green futures, to create the illusion of buying in the market by institutional players, what they're going to do is they are going to sell that rally. They're going to fade it just as they've done for the past several days. So the key to this game right here, right now, is to show some patience. Really, if you weren't born with it, like I wasn't born with it, patience, I guess learn it. It's critical to survive this upcoming, what I believe to be a bear market. So the E-minis, you can see they're already fading a little bit. E-minis opening up higher. Let's set up a couple of alerts here. Ugh, I had to put my glasses on. Okay, higher high. And let's put in a lower low. Now, I know what the 30-minute charts look like on trip Qs, on the ES, and it's a very tight consolidation, a 30-minute time frame consolidation. So it's not going to surprise me the least if they spike the market up higher in the morning. The question is, does it hold? I doubt it. Again, that's not what bottoms are made of. So all we want to do right now is identify whether or not we have buyers. And so we have our high of the session. Do we take out that high, which would imply that you have some interest, or do we ultimately fade and take out this lower low? Let's move on to the NQ, the NASDAQ 100. And we are up a little over a quarter percentage point here. And if you want to take a look at what I was referencing earlier, we'll go to a 30-minute chart. And you can see that there's clearly some support below here. The question is, do you get one of these deals? A drift up higher, a bear flag setup, and then you break lower. So we're going to do the same deal here. We're going to set up an alert. And we have some resistance up here. I'm going to create an alert just above it. Ugh. even with my glasses on. Okay. Okay. All right. Let's go to the mid caps. Mid caps are up spot 19%. Small caps, why are they not up here? I did prepare for the show. Where's the rut? Here we go. They're up about 1/3 of a percentage point on the session. So, we pause here and we say, okay, why is the market going down? And has that changed? Well, first we got to take a look at the dollar, because the dollar matters. And the Dixie is down at current. Euro, this closed pretty strong on the week, and it is up at current. Yen, very bad week last week. Looks like they're trying to test the bottom here. If they get a rally going here and the euro rallies, dollar goes down. Let's take a quick peek at the 10-year yield. The 10-year yield is up spot 41%. If we make a new weekly higher high, this is going to be a problem for the markets. A very big problem for the markets. Our equities holding up here. They're holding their gains. They're not capitalizing at all. But this looks like we're probably going to take out the highs of the session. This is the E-minis. Let's take a pause here. Let's let the future settle out. Let's say hello to folks. Jody, very early, first commenter of the evening. Welcome, Jody. Trader Isaac. Yeah. Your lips to God's ears. Good evening. You got it, Franklin. I'll check. Mr. Jeff. Same to you, my friend. NVIDIA watching. We're going to go over the chart of NVIDIA in a minute, Mike. We're going to go over the chart of SMCI as well. They're very highly correlated. So if you're an SMCI investor, then you've come to the right place, because we're going to be doing a deep dive on that chart as well. Well, you need to wash out first. And you can get that bullish candlestick actually on the washout. Hey, Patrick. Welcome. Okay. Yeah, we're right at a support level. We're about 20, 25 bucks away from a support level. So I'm looking at the E-minis here. They're gaining some steam. But yields are holding in there as well. Let's check in with gold. Now, gold did not put in a new weekly higher high last week. And, oh, look at this. It's down about a half percentage point. Big gapper here. So gold looks like it's going to pull back. That's strange that gold is doing this. Maybe not so strange with the dollar down, because one thing I mentioned on the weekend commentary is that you need to be careful of gold and the miners here because they've been trading with the dollar. But the question that needs to get asked is why? Because they generally don't. And the only time they generally trade together is geopolitical risk off. So if you have a geopolitical event that's out there, Israel, Iran, that's a big one. That's a big one. So, but that looks like it's been snuffed out. So we just made lower lows here. Oh, they're killing gold. I may look to short the futures on gold later on. We'll see how this settles out, but this is pretty bearish. Okay. Let's check in with silver. Silver gapping down. So this is clearly an environment where we're getting risk off, meaning geopolitical risk is coming off. It's being reflected in gold and silver, at least in the short term. There's reasons why this is all going to come back. This is an opportunity. Gasoline price. I want to go to a weekly chart here. We saw a pullback last week on gasoline prices. We saw a pullback as well on light sweet crude. All the symbols I put up here are gone. Here's light sweet. That was a down week. Looks like this is the new week. We must be off the lows. That's why it's showing green. So light sweet opening down, but coming off of its lows. Now, we're going to be spending a lot of time tonight talking about commodities, and I know a lot of people, they want to hear about tech stocks, and that's it. But there's rotation going on here, and to ignore it would be foolish. So we want to respect what's going on out there, and to ignore commodities is absolutely crazy because it looks as though they are ready for liftoff. I mean, all you need to do is take a look at, let's go with copper. Wrong chart. Copper. There we go. Weekly chart, copper. We were talking about this back here. Look at those. It was ready for liftoff. Sure enough, we've lifted off. We had a double bottom setup, consolidation, Bollinger Band squeeze. I think we're heading up higher. It's extended, sure, but I think copper is heading up higher. Excuse me, copper, right? I thought I had the wrong symbol. Now, other names out there that looked like they were ready to go last week, and I was going to buy the futures on platinum. And I'm glad I held off, and I'll show you why. My symbols are so messed up tonight. Here's platinum. Now, platinum had broken out the week of the 8th. Last week when I was looking at it, I had an alert that fired off. I was looking at him saying, well, it's got to hold this support level. But it was early in the week. And so I said, wait to see how we close out the week. And sure enough, I'm glad that we did because we broke support. Now we're back down into this trading range. Am I a buyer here? No, there's not enough buyers out there to support the breakout. I'm not going to buy right here, right now. If they pull it back to this lower band of support, I'll buy platinum, but not until then. Now, looking at nat gas, we're going to be talking a little bit about natural gas along with the commodity plays in a moment. Nat gas is opening up. Let's go to the 5-minute chart. It is opened up. It was measurably higher. It's pulled back some, up over a half percentage point. Now, I bought natural gas about just shy of a month ago. It was getting killed. And so I put on the common stock or the common shares for a boil. It's a leveraged product. And I could book a profit. I could have booked a bigger profit a week or so ago. That profit's been halved now, but I could still book a profit. And I said, you know what? Let's do a little bit more analysis here. We know that energy demand is building. So, and natural gas has been in the bear market now since 2022, 2023. So why not look at the monthly chart, see whether or not we have a trade here, but a longer term one. Those are the ones that really make your year if they take off. So I looked, and we're going to go over the chart in a moment, and that is looking pretty darn good. So I have a little bit more fundamental data to go over as well. So stick around and talk about natural gas as well. Let's move on. Now, one area HH is higher high. I just want to know if we break out here. I think we may. Excuse me. One area that's setting up very nicely is agriculture. We talk about this every Sunday. And in this case, I was bullish last week on wheat. I remain bullish on wheat. And this is corn now. And corn is setting up very nicely. It's still trading down below its 5-week moving average. So we really need to see a close above that mark. It's not healthy that we're trading down below it. But I got to tell you, this is looking pretty good. If you're looking for opportunities for commodities, whatever, at rock bottom prices that appear to be have technicals that are setting up very, very nicely, take a look at what I'm talking about here. And let's get rid of this. Actually, we can keep this on because this is going to act as an upper band of resistance. So we'll make that our resistance level. And create a new lower band of support. I think we're breaking out here on corn. Wheat is already broken out. We broke out the week of April the 1st. Then we had a retest, which did not hold, but we managed to trade outside of this upper band or this breakout point last week, and we closed right at it. So what I'm looking for here is a continuation move up higher, a breakout on wheat. Let's take a look at soybeans. Now, soybeans, I'm not as bullish on. They're still under a lot of pressure, but it's a developing story. So I'm not a buyer here. I'm not a buyer of any of these yet. Uh, Corn and wheat definitely are clearly right there. They're ready to get nibbled on. Soybeans, not so much yet. But before we go back to, we'll move on. I want to take a look at let's go to the NQ because that's where all the action was last week. See how we're holding up. And we're not seeing the follow through. Now, Asia hasn't opened yet. So if you're looking for an opportunity to buy this market, you really want to see this market crater tomorrow morning. I mean, just crater in the morning and then watch your support levels. And then you're going to have to take a leap of faith. Step in, begin accumulating a position at support levels, and then look for the reversal day. If you get a bullish key reversal bar, if you're not familiar with what that is, I have a 5-part video tutorial. My top 5 favorite candlestick patterns below. The bullish key reversal is by far my favorite, and that's what we're going to be looking for sometime this week. I do believe that we are going to get a rip your face off rally sometime this week, but not before we get a brutal sell-off. Some people may think that Friday was the day. It wasn't the day. You rarely get a day like Friday where you don't get a follow-through move to the downside. We closed at the lows of the day. We'll go over the chart in a moment. We'll talk about it. As a matter of fact, let's get to it because we have chart requests to get to, all sorts of fancy stuff. So let's talk about the week that is ahead of us. Breaking news, Tesla cuts prices. This is just off of the press. Tesla cuts prices for many of its models worldwide, slashes cost of full self-driving in the U.S. So I don't know what this means for Tesla stock. I mean, it's really gotten beat up here. We'll go over that chart as well if I remember it. So Tesla looks like it's going to be under more pressure tomorrow. I mean, you got to imagine that if you're a Tesla owner, are you going to buy another Tesla? Because if you're trying to sell that car, your resale price is just dropped like a rock. So I'm worried. I like Elon Musk, but I'm worried for the guy, to be honest with you. Who am I to worry for a multi-billionaire? But it's not looking good. Monday, we have no reports scheduled. That is open season for a continuation of the move lower. Now, on Tuesday, we get services PMI, manufacturing PMI. Any read above 50 is a sign of expansion in the economy. And they are expecting a positive number. Now, what might make the stock market rally on Tuesday? A miss. If you see a read down below 50, well, that's going to be game on to the long side for investors. Why? They want rate cuts. They're not going to get them in a GDP 2.0. Actually, I'm sorry, greater than 2.0, but at 3.2 GDP, you're not going to get a rate cut. Wednesday, we get durable goods. Thursday, GDP. This is the first report for Q1. They're expecting a GDP read of 2.2%, which is the historical norm. Friday, personal income. That's an inflation wage. And the Pimp Mac Daddy of all inflation benchmarks is the Federal Reserve's favorite PCE that comes out on Friday. A chock full of either landmines or catalysts to send the market up higher. But the only way you're going to get a market moving up higher is with a miss on your inflation data and on economic data. That will get the markets rallying briefly. Then I think we roll over. Earnings. This is going to be a huge week for earnings. A large number of S&P companies are coming out beginning next on Monday, I should say. Verizon. Tuesday's really when it gets started. You get GM, UPS, GE, Spotify, Halliburton, Tesla after hours. That's going to be a big one, a real big one. Visa reports, Texas Instruments, Boeing on Wednesday morning. That should be a show to watch. General Dynamics, Humana. Wednesday is going to be a big day. After hours, Meta, IBM, Ford, Chipotle. Thursday, Cat comes out, a bunch of airlines. Then you get Microsoft, Google, Alphabet, Intel, Snap, Roku. And then on Friday, you start getting the energy names. So you have a lot of S&P 500 names reporting this week. So it's going to be a slugfest of a week between economic data and the earnings coming out, combined with the technicals of the market, which are coming under a tremendous amount of pressure. Now, in terms of valuations of the market are still very expensive. We were at around 35 this time last week. Now we're down to about 33. Not much of a change. Still elevated versus historical norms. Now, when it comes down to the catalyst of why this market is rolling over, look no further than the Fed Watch tool. I'm going to do a refresh here because this updates frequently. And there were a couple of days last week where this had factored in a rate hike, very, very small probability. June, we're now below 20% probability of a cut. At one point in time, this is about 80% probability. Gone. Not going to happen. July, now at 41.9. A couple of weeks ago, there was, right back here, a month ago, the probability of a change or no change in the current rate was only 15%. So roughly an 85% probability that the Federal Reserve was going to cut in the month of July. That is now probably not going to happen. So we know that the markets began to rally in earnest in October due to the fact that we were given a signal by the Federal Reserve that they were going to cut rates. But now it's evident that they're not going to cut rates anytime soon. And that's the catalyst that's sending the markets down lower. Add to that the rise in the 10-year yield. Now, over the weekend, I'll point your attention to this number here, the $34 billion number. This past weekend, the House Uniparty, there's no longer a Democrat-Republican Party. If you can't agree upon that, then you kind of lost. I mean, you got to look at what's happening. Don't listen to what they say. Watch what they do. And you have the Democrats and the Republicans. Not all Republicans. The conservative Republicans are trying to hold in there, but by and large, the vast majority of Republicans in Congress have joined hands with the Democrats to sell us out. Tax day was April 15th. All that money that's been collected from the hardworking U.S. taxpayer is going overseas. Not here. We're not going to talk about the areas that they're going because I don't want to make this a political debate. But to think that we are not getting robbed blind and that this is an effort to dissolve the middle class, to ignore it is beyond bizarre. It's a reality. It's happening. So they got together, the Uniparty. This guy was supposed to be an Episcopalian conservative. And what did he do? Spent $95 billion gone into the ether. There will be no auditing of that money, and it's gone now. So we don't have the capital. They need to go to the bond market to get the money, and they're going to pay a lot of interest on that debt. It's not like it was 2 years ago, 3 years ago. I don't know this gentleman, but I like to tweet. They just voted to borrow another 100 billion. They are actively and intentionally fueling inflation. They don't care that you know. They don't care that you oppose it. They don't care at all. It's so right. Here's our debt. Here's our debt. And at some point in time, they're going to cut rates, but they're never going to cut spending, not until they're forced to by the bond vigilantes. They're going to cut rates, and the Federal Reserve's balance sheet is going to blow through the roof. If they stop this spending, GDP comes to a halt, comes to a grinding halt in this country, because the only way that this economy is growing right now is by the government creating inflation. They're creating inflation so that they could spend money that we don't have. And yes, it creates inflation, but they don't have to raise taxes. Therefore, they can't be held accountable by the taxpayer. They just assume that you don't know that it's them creating the inflation. It's the government that's creating the inflation. However, they blame the companies for gouging the consumer. It's them that are doing it. Total uniparty. And here we go. The banks. You want to know why the banks are behaving very, very strong? This is the reason. Credit card interest at 22%, highest in 30 years, servicing $1.3 trillion of debt. People are living off of their credit cards. And you come back here, here's the problem for the banks. The delinquency rates are ripping through the roof. So this is off the Kobisi letter. The economy is on track for its longest 2% GDP streak in 20 years. On April 25th, the U.S. will publish GDP data. We already went over this. It is expected that we're going to grow by it's wrong, by 2.2%. It's expected that we're going to grow by 2.2%. So that's inaccurate. The last time U.S. economy has seen a streak was in 2003 to 2004. Is GDP the best economic indicator? Of course not. Of course not. Because what's driving this growth? It's you, we the people. We the people are doing it. Because it's not the private sector. U.S. commercial and industrial loan growth. There is no lending growth. So in an environment where you have a GDP supposedly on an annualized basis of 3.2%, you would expect that banks are lending money out to companies to help build out their factories or whatever. They're not. What are they doing with that capital? These institutions are evolving into primary lenders to the federal government. They're putting their capital into federal debt. That way, the federal government can spend it and pay an artificially lower rate on that money. And what do? They send it off overseas. They spend no money here. Look at California. Look at New York. Look at our borders. It's not being spent here. It's going overseas. So the reason why I'm going through all this is not to talk politics. It's to provide a backdrop of this market and why it's finally beginning to buckle. Companies cannot make money with a 10-year yield at a 5-handle. Most of the growth coming out of the S&P 500, if not all the growth coming out of the S&P 500, out of 7 companies. The rest are stagnant. So on Friday, the Magnificent Seven stocks are raised 400 billion of market cap on Friday. All the red, and this is not a broad-based sell-off in the equity markets. The banks did really well. JP Morgan was up 2%. Wells Fargo was up 2.3%. Bank of America was up. Pharma was up. Staples did very, very well last week. Bullish key reversal bar on the week. Energy did very well. It was mostly the tech space that took it on the chin, in particular, the big AI names, NVIDIA, to a lesser extent, big name is SMCI, but we had a trade in that. So that's why it's on the top of my head. So let's take a look at the Trip Qs. So we should look to invest in those 7 companies, logically, excluding Tesla. Not right now. No, I don't think now is the time to put capital to work in those names at all. I think you need to see how their earnings come out. And I mean, case in point, you had Netflix that came out, and their numbers were really, really good. I was watching the tape as it was coming out, and they beat on earnings, beat on revenues. And then what they did is that on a forward-looking basis, they stopped reporting subscriber growth. Why? What are you going to do that for? What are you hiding? What's the problem? And they sold it off, and they sold it off hard. So what should have been a very, very strong earnings report and in response by the stock was not. They're circling the wagons over at Netflix. They want less information out. So no, I'm not saying to go buy stocks right now. I think that there's a trade. I mean, you take a look at, let's take first look at the Trip Qs, which is where a majority of the damage took place. Here's the weekly chart. And we're not at support. I think we're heading down at a bare minimum to 410 pretty quickly. So we have another $4.65. We could be there tomorrow morning. And that's why I'm looking for a rapid sell-off. You just want to see it drop like a rock in the morning. And then you want to see buyers, the program buyers, move in and bid the shares back up. So I'm looking at a price target here on the triple Qs of between 405 and 410 per share. Let's go to the daily view. You can see that we're probing the lower band of support, the 38.2% Fibonacci retrace. I usually only use the Fibonacci's on a retrace, and right at that 410 mark, actually 408, if you want an exact number, 408 spot 24. That's where the 38.2% Fibonacci retracement is. That coincides with a support level. So that's where I would be looking to put capital to work for a short covering rally. It may last a day. It may last 2 days, 3 days. I don't know. I'm not that smart. But we will be looking to get long in this market very soon, but only for a trade. And then what we're going to be doing soon thereafter is looking for a higher low. It could be a rally up to 4.25. If we stall out there, then we're probably going to reestablish shorts. We took some shorts off the table on Friday. We're still short of the triple Qs. I'll probably take the rest of the position off the table, book profits when we get down to that 408 mark on the triple Qs. So that's the strategy moving forward. Then we look to buy the market for a rip your face off rally. It is going to be a ruthless rally. So it's not going to be a namby-pamby rally. As soon as we get down to those support levels, the computers are going to light up, and they're going to squeeze the shorts. They're way too complacent. They should have done some short covering on Friday afternoon. They did not. We are at a support level right below at, where is it? Right here. It doesn't highlight it for me. Right here. 413 spot 57. I don't like that support level. I much more prefer the 408 level because that coincides with the Fibonacci support level. So, and you could tell that there was no buying on Friday afternoon due to the fact that we closed right off the lows of the session. There was no short covering. So, where else do we like equities in this market? Or where else do we like to put capital to work in this market? Folks, I spoke earlier about copper and how it is in fuego. China is stockpiling everything, copper to oil, nickel to ore. This is the new currency. Commodities are the new currency. Don't forget what our government is doing. The US dollar is the fiat currency, the global reserve currency, but this is unsustainable. This is all very unsustainable. And at some point in time, the globe is going to call BS, and they're already doing it. Look at the breakout in the Dow Jones mining sector monthly chart. We've been talking about this for a few months, watching the consolidation. Now, in the month of April, we have broken out. Does it hold that breakout? We don't know. It's much too early in the month. But as it stands right now, this snapshot in time with a few trading days left to go, we have a breakout in the Dow Jones mining space. We're off the lows of the month, but I think that we could easily move up higher from here. Here are higher lows. And now we have a higher high. Higher high on RSI. And volume is awesome. This is where the money's going. You can't ignore it. So, while Friday was a bloodbath of a day, yeah, it was for tech. Energy did good. Banks did good. What's gold telling us? Gold is telling us is that this inflation's crazy. They can't even maintain the price of gold in the paper currency markets at the COMEX anymore. It's off to the races. So gold up, looks like it's coming under pressure right now, but at current on the month up nearly 8% on the month. Silver, major breakout here, up on the month, 15% on the month. So what is this all telling us? The markets are saying the United States is a basket case. The Western world is a basket case of debt. Massive amounts of debt. Even Japan, massive amounts of debt. They raised rates. What did the yen do? It collapsed. All right, so the junk bond market is coming under pressure. And you always want to watch this. So bar chart, U.S. corporate debt yield to worst, less 10-year treasury, blah, 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 blah. It's just a formula. We're seeing spreads blow out here in the high yield debt market. And you just take a look at the HYG. You can look at the JNK, same thing. We're down on the month, 1.75%, which is a pretty sizable move. Let's check out the JNK. That's down about the same. So junk bonds are coming under pressure, and they've broken support now. So the market structure is changing. It's changing dramatically, and areas that you need to keep looking at are not so much what's traditionally worked. We need to look at what hasn't worked for a while. And case in point, take a look at energy. Energy, this is off the U.S. Energy Information Administration. They report nat gas inventories every week. Natural gas expectations for growth by 2030, 2 to 10%. This is very interesting. India, Africa, and parts of Asia and the Americas have the fastest growth in energy consumption by industrial sector, the reindustrialization of North America. In these regions, growth in manufacturing is more significant than declines in energy intensity leading to overall growth in energy consumption. Industrial energy consumption declines in China as manufacturing becomes a smaller share of the total industrial activity in the country. Think about that. Who would have thought that 5 years ago, pre-COVID? Now it's a reality. It's happening. So I spoke earlier about natural gas, and it's been beaten to a pulp. You look at the chart, you're going to say I'm crazy. This guy's crazy, but I'm a contrarian. And well, and a contrarian. I was listening to All Star Charts, which is I forget his name over at All Star Charts. Um, Good technician, and he says contrarians are usually wrong. And that's not really, there are different types of contrarians. There are contrarians that are out there that look at a chart and they say, this can't go up anymore, close their eyes and press the short button. Yeah, they're going to, there's a lot of them and they're going to get cleaned out quickly. But there are other contrarians like me that we're looking for opportunity in terms of macro events setting up. And we'll go to the chart, a monthly chart of nat gas in a moment. But this is a great post. Nat gas production has continued to grind lower. So, law of supply and demand. We know demand is going up 2 to 10% by 2050. However, production is grinding lower. What's wrong with that picture? That's good stuff as an investor. While a year ago, output was breaking out to new highs. So this time last year, we were breaking out to new highs. Now production is coming in, demand is still growing. As a result, production is down 3.1. I don't know what the BCF is. I always forget. That's the measure of how they measure natural gas. It'll come to me after I'm offline. The largest year-over-year decline, excluding brief freeze-offs in 2021. So here you have it. Daily production in blue versus a year ago in red, declining. That's a pretty picture. That's good stuff. So demand rising, production declining. Thank you, Joe Biden. So here's the chart, monthly chart, not a daily chart, not a 15-minute chart, monthly chart. What I always say about entering a contrarian trade is that if you're going to do it and it's not in a stock that's selling off with RSI down below 20 or above 85 or 90, looking to short it, then you better have a reason and an edge over other traders. And the primary reason that you're going to be looking for with a stock, or in this case, a commodity, of as to why you're going to buy it, it's got to stop going down. So that's why we begin with a monthly chart with a 100,000-foot view of how it looks. Have we stopped going down? Yeah, we bottomed out back in February, and you could see how we hit the lower band of the declining downtrend channel, and we ripped up higher. Still closed down lower. We were lower in March. Heck, we're lower this month. But this, if we closed out the month right here, right now, this is a doji star formation, another one of my top 5 favorite candlestick patterns. Again, link below, 5-hour video tutorial. If we close out this month with a doji star formation, that's the stock market or the commodity market saying, okay. So what you got here is a tug of war now between bulls and bears, because for a long time now, the bears have been in charge with brief exceptions, short squeezes. Now, it looks as though there is an equilibrium, and there's just not enough shorts anymore looking to take out gas to new lower lows. We have stopped going down. Now, is it a screaming buy? No, it's a speculative buy. But we're positioned and we're looking to add more once we begin to see the chart improve. Look at the higher lows on your stochastic. You drill down to a weekly view, it's an amazing setup. higher lows. We broke out a sloppy breakout. We broke out on natural gas last week, retested the breakout point. It held. They tried to take it down. It held, took it back up to close there. Volume was big. Daily view, and we'll leave it off there. And it closed down on Friday. This is not a screaming buy to me on a macro view. I wouldn't buy this based upon the daily chart. It could take several months before this thing really begins to take off. So if you enter the trade, understand this is not a commodity that's set to rip tomorrow. Maybe it does, maybe it doesn't. Maybe it's next month, maybe it's next year. But one thing I will point out is that a Bollinger Band squeeze is setting up here. You have the Bollinger Bands in black, inside the Keltner channels in gray. Last time we saw that was back here. And then we had a rip your face off short squeeze. So that is natural gas. Michael, I think you can buy UNG. Yeah, UNG is a fine product to get into. I'm using Boyle, but UNG is not a leverage product, so it could certainly get you in. Last tick was 14.52. Oh, you're saying it could go lower? Maybe. You know, it's a bottoming process. So sometimes it takes weeks, if not months, to bottom out. Years. Let's talk a little bit about NVIDIA. Now, NVIDIA closed down 13.5% on the week. Can it go down further? The greatest AI stock of all time? Yep, it can. It's under distribution. You're going to have support right here at 745.43. If that fails, it's coming down here to 671. Let's go to a daily view. Here's some support. 712 may be support as well. But this is your range. Let's bring out the Fibonacci retrace tool. Let's see where that 38.6 mark is. Yeah, we're right in that range. 746. I think that we're probably going to overshoot that 746 mark. I think that they then reverse it off of that mark. But I do think that we can head lower. Now, if they close it down below 38, down below 746, then it's coming down here to between 708 to 678. Now, moving on to SMCI. The thing you need to understand about SMCI is that it's very, very highly correlated to NVIDIA. Okay, we just had an alert fire off. We'll come back to that. So we just had a breakout on the E-minis to new session higher highs. Not a lot behind it. Let's see if they get some juice to push it higher. I don't think they do. All right, so SMCI highly correlated, almost 100% with NVIDIA. Here, SMCI versus NVIDIA, up at around 100%. 98% to be specific. Now, NVIDIA is a different story. This is a stock that has just gone parabolic. I called the top on SMCI. We were short using, we sold call spreads. We did very, very well on that trade. Last week, not so well. We did an iron condor. Friday killed us. We were profitable, and Friday just killed the trade. So we're still up on SMCI, but Friday was a hurtful day. Now, the problem with SMCI is that it's thinly traded. There's only like 55 million shares out there. B, you have support down here at 693.60. It may hold, but if it doesn't hold, this thing looks like the ES just took off higher. Yeah. All right. So the price is up higher. This thing could drop all the way down to 523. They report on the 30th. Daily chart. Here's that support level at around 650 per share. And that we closed right at the 38.2 retracement mark. 50% retracement, we down at 611.93. I think that they're going to reverse it off of the 657 mark. You get a short covering rally, and then it rolls back over again. That's my take. Sticking with it. Let's do some chart requests. We got Jeff. We got Franklin. Okay, so DGT, Donald J. Trump. DJT. All right, so on the week last week, it got beat up a little bit, but it reversed to close higher. Bullish. In fact, we broke out. Daily chart. Yeah. Broke out above two resistance levels on DJT. I'm bullish on it. I think it goes up. BMY. Weekly view. Natural gas. There you go. Natural gas just made new session higher highs. Woo! Now we're up 1.14%. Natural gas. Okay. Bristol Myers Squibb. This chart's really been beaten up. Let's go to a monthly view first. Oof. Ugh. This is a basket case. It's right at support. I mean, if it closes down below 47.44, it goes a lot lower. I mean, this is a great place to buy, to be honest with you. If you're bullish on the company, it's a great place to buy. The reason is that you know exactly where to stop out. This thing closes down below $47.44. You know you can get out. Where did it close on Friday? $48.93. So very, 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 very low risk reward because you got to stop out below that mark. It's not even a debate. You got to get out because it's in a bear market. Let's go to the weekly view. Bullish reversal bar on the week. That's good. So what you want to see here is a higher low. Not the best higher low I drew there. Let's get rid of that. I could do better. I want to be a better version of me. There we go. A little bit better. So a higher low versus the lows last seen back in February. When would I be an aggressive buyer? I would nibble here with a tight stop. When would I be an aggressive buyer? Right here. Show me a close about 55 bucks a share. I'm all in. Because now you've gone from a stock that has been in a bear market for a while now, lower highs and lower lows. Now it's putting in higher lows and a close above 55. That's a higher high. That's a new uptrend. Daily chart. I'm a buyer here. Tight stop. I'm a buyer. Okay, SQQQ. All right, so we kind of already covered the strategy here. We're looking for 408, 410 to 408 on the triple Qs. We're going to cover our short. We're going to be out, 100% out of our short positions. So SQQQ, this is a leverage product, which we own. Here's the monthly view. Good month. Weekly view. Really great week last week. We're going to see resistance right around 1485. There's a volume shelf there. Great volume last week. Daily chart. 1373, a bit of resistance up there. Then around that $14 per share mark, we're going to get some resistance. So I want to get out on any weakness and book as much profits as possible. Am I going to be looking to re-short the triple Qs? You bet your bottom dollar. No doubt about it. We're going to be looking to short the triple Qs. When am I not going to want to short the triple Qs? Show me the probability of a rate cut coming soon. Then I cover my shorts and the market's going to rip in anticipation of that rate cut. I don't think they're going to do it. I don't think they're going to do it unless they're forced to. If they cut rates, there's a reason why they're going to cut rates. And it's not a good one for the equity markets. They're going to cut rates until the stock market stops dropping. NVIDIA. We kind of went over this. Let's do a recap on Trend Spider. Yeah, this wants to go lower. I think that we get a sell-off this week and then a reversal, and then we roll back over again. They don't report earnings for a while. Strange. I have no automated trend lines here. Why? Daily chart. Huge volume on Friday to the downside. Let's go to a 30-minute chart. Closed out. Really poor close. So if they rally the markets tomorrow morning, folks, I think they're going to do what they've been doing of late, and they're going to sell into it. So I'm not a buyer here. Not ready yet. Could I be wrong? Of course. Wouldn't be the first time. Franklin, ETO. Eaton Vance. Monthly chart. This has really gotten beaten up. I'm not a buyer here, Franklin. I think that we had a counter trend rally and we're rolling over. It's going to resume its downtrend. Weekly chart. You're going to see support down here at 23.22, but I doubt you're trying to trade this. Probably more of an investment vehicle. Does that hold? We'll see. But 23.22 is your next support level. And I'm pretty confident that it's going to get tested. Daily chart. Yeah, bearish key reversal bar on Friday. The markets are telling you, you got a lot of resistance up here. So I would avoid this for now anyway. And I really pay attention to that monthly chart because, if we close this week or worse, we could come all the way back down to $20 a share. And that's a lot for a tax fund, a dividend fund. And I think that is all we got for tonight. You still in AAL? Nice. GE. Now, is this the split? Have they already done that split on GE? Because now it's GE Aerospace. Beautiful chart. I'm not a buyer here. I think it's extended. It's probably going to come in. I'm not a buyer here. I think it's looking at a correction. I would eyeball a support level at around 141, see if that holds. But I'm not a buyer here of GE. So they did. Okay, so that's in the rearview mirror now. Okay, so I know the stock was very, very overbought. So now you're probably going to get some sell the news going on here. So I would avoid, and could go to 132. I'm not going to argue it. You're probably right. It's not looking good. All right, everyone. Thank you very much for being here. Like, subscribe. You know the deal. Have a profitable trading week and an awesome Sunday night. I'll talk to you soon. Be well.